back. Shares of European luxury automaker Porsche have fallen 40% over the past year. There's a look at the stock. It trades on the Frankfurt Stock Exchange on the extra trading platform. It is down 65% since a high in April 2023. Our next guest is a veteran auto analyst. He's taken a close look at the near-term headwinds and perhaps the longer-term tailwinds for this stock. Our guest is Tom Narayan, lead Global Autos Equity Analyst at RBC Capital Markets, and he joins us now. Tom, thanks a lot for joining us. Let's begin with some of the issues that you flagged as near-term headwinds. And at the top of the list, I think, is China. Sales in China are important to this company, and they are under pressure, correct?
Yeah, China used to be its biggest market. I think over 30% of their sales went to China. Now it's only about 19%. A lot of that is just because they've been losing share to the domestic OEMs over there. So it's been a big problem for them.
What kind of OEMs are grabbing share from one of the most iconic luxury and sports car brands in the world?
It's the Chinese domestics. It's BYD, it's Xiaomi, NIO, Li Auto. There's a number of local companies there, local brands that have been putting out some really compelling, really cool products that the Chinese consumer has gobbled up. But the other thing is, you know, most of what Porsche sells in China are actually internal combustion engine cars, not EVs. And if you look at what's happening in China, EVs are really growing fast. And so it's also just a function of the fact that Porsche sells less EVs. And the domestics there have like prices that are like a quarter of the price of what Porsche is selling for similar performance.
And the other near-term headwind you flag is, of course, U.S. tariffs. As a company that makes cars in several locations and sells them around the world, that would be a significant headwind, correct?
Yeah, a quarter of all of Porsche's sales go to the U.S., and all of those 100% are imported. So as it stands now, that tariff headwind is significant. There is expectation, though, that maybe deals will be struck between the U.S. and the EU that could soften that. But as it stands today, both this tariff issue and this China issue are really weighing on the stock.
How well positioned are global automakers like Porsche? How well positioned are they to compete with the domestic Chinese makers that you've just mentioned, many of whom, if not all of whom, I think are basically subsidized by the Chinese government, correct?
That's a great point. Yeah. I mean, the reason why the Chinese are gaining share, it's not just Porsche, as you pointed out, it's Mercedes, it's BMW, it's Maserati. The reason why is because you have heavy subsidization. Some of these local brands in China, domestics, are operating at a loss. They have huge advantages on batteries because it's a local infrastructure there. Also, the Chinese consumer tends to want a more tech-forward vehicle with autonomy features, and the Chinese domestics have really done a great job at using their local infrastructure to get that autonomy and the tech forward. And the battery infrastructure is much better there. It's cheaper. They use LFP chemistry, whereas the German OEMs who are trying to sell down there are using mostly nickel-based. So there's a huge price disparity as a result.
Okay, so for reasons that we've talked about, a very difficult Chinese market, a very difficult U.S. tariff situation. You've initiated coverage with a sector perform rating. You've put a price target on the stock, not much higher than it closed at yesterday, 45 euros versus basically 41 euros. But you do see, for investors who are looking to hold a stock for 3 to 5 years, some significant tailwinds, and one of them is longer-term growth in the luxury auto sales market.
Yeah, this is actually, really interesting. If you look at forecasts of luxury autos, just in general, including China, the prognosis looks great. I think it's like 12% growth per year in this category for the next 10 years. A lot of this is driven by ultra-high net worth growth. So the secular dynamics is very strong. The other thing I would say is longer term, Part of the weakness they've been having is the subsidies in the local market, is the fact that they have this battery cost advantage. But that arbitrage should kind of go away. Battery costs are coming down. There's a floor. Batteries can't cost less than a certain amount, like $65 per kilowatt hour. They're around 115 globally. For China, they're probably sub 100. So that arb will kind of narrow. Also, Porsche and some of these global players will start selling more EVs to capture where that demand is. And I do think they'll start adding more tech forward features, collaborating with local supply chain, local players to make those vehicles more Chinese friendly or Chinese consumer friendly. That should all help longer term. Let's not forget, this is a storied brand, Porsche is. And for a luxury consumer in China, who wants a car that costs over 500,000 RMB, around 70,000 USD, that brand means something. And that stock has just really pulled back quite a bit, as you pointed out. So I do think at some point, we'll start seeing those losses in China slow down. I do think the U.S. tariff situation gets resolved. There will be deals, I think, struck with the EU. So maybe near term, it's going to be, challenging, but longer term, this could be an interesting name to monitor.